everybody. Welcome to the technical analysis webinar here with AvaTrade. My name is Troy. I'll be presenting. As we get started, let's do a quick systems check. If you would, type OK in the chat box if you're hearing me clearly and seeing my screen all right. Okay, looks like we're up and running fine. If anyone has any issues as we go along, feel free to let me know. As always, keep in mind that there's risk involved with each trade that you take. No one trade is guaranteed to profit. So you want to manage risk in a way that makes sense for you. And we'll go over some ideas in that regard with some of the useful tools that are found within our order window, if we have a chance to go through some trade simulations. And also keep in mind that what we go over is not meant to be financial advisement, but is coming from an educational perspective. Now, from our main website, we can log in the upper right corner to our web trader platform, which allows you to trade on both the MT4 and MT5 accounts from one location. And the same is true with our mobile app, which also has the same trading tools, the free signals, the market news, the advanced economic calendar. All of those tools are available in our app as well as our web trader. And our app can be found in the major app stores. Now, to get to our web trader, as I said, in the upper right corner, we'll log in. And within the web trader, then we can go through in today's session some ideas for how our platform can assist you with your technical analysis and in the end, trade decisions as you combine maybe technical analysis with some other tools that are in our platform. Sometimes you want to combine the fundamental news along with the technical entry points and exit points, just to be sure that you think the wind is at your back, so to speak, when it comes to the fundamentals. But we'll look more heavily at the technicals today and try and get some idea about the fundamentals as well. In general, the markets have been positive today in terms of the equities, the stocks, and major indices. Part of that is somewhat weak data out of the US that wasn't too bad, but bad enough that with the advanced data payroll, it's the advanced jobs numbers that came out today out of the US to make folks believe, okay, there's probably going to be another rate cut before the end of the year this year in the US. And the stock market tends to like interest rate cuts, and the fact that the data was kind of weak today, but not overwhelmingly bad, that created some optimism about rate cuts and that the economy's still tugging along okay, but not at a rate that's going to prevent further rate cuts. And so there's some optimism on the markets with all of that today. And there were some other announcements as well, but that's kind of one of the main storylines today fundamentally. And also, again, there's anticipation of pro-business policies out of the US with the Trump administration coming in soon. And so there's still some optimism being carried over from the US election and what's expected in the, let's say, coming year or two with some pretty strong ideas about pro-business policies that could be enacted with tax cuts and deregulation, etc. So all of that's creating a bit of optimism, and then we could combine that fundamentally with a ceasefire in the Middle East between Israel and Hezbollah. There's still fighting going on in the other direction in Gaza with Hamas, but the Middle East has calmed down a bit from the fears of a larger regional escalation with Iran, at least in the immediate sense. Now, you combine maybe all of those somewhat positive fundamental storylines now with the technical analysis, and you can get a feel for which way you might want to trade on various instruments. And so we could take a look at where we find signals, and you can scroll down and look through lists of signals. We've got gold here, for example, and we see it's a buy signal on gold. That tends to make sense when you're expecting maybe a US dollar that could weaken, that gold could rise as a safe haven against inflation. So with the weaker than expected job data and the advanced data payroll today out of the US, and expectations of maybe a rate cut to come still this year, maybe there's some anticipation that the USD would weaken with that, and and causing some bullishness with the gold signals. And so we do see that this was already a successful buy signal. Had you looked at this earlier in the day, and this is the case a lot of times with this evening webinar that I do, the signals that we look at, many of them have already carried out. And that's the case here, where gold came right up off the pivot line. You see that pivot line was perfectly placed. It bounced off the pivot line, which is supposed to act as a support level, which it tells you here. And up it went to the take profit zone, just getting to the first level of where they're suggesting you might think to take profit. It may not be done rising. This is the first resistance level that was found in the technical analysis. The higher resistance is up around 26.66. And so we could draw that out on the chart. 26.66 is up here. Out of view on this screen. So let me pull this down. 26.66 would be up here. Okay, so this is the second take profit suggestion at the top of the take profit zone here, where they're saying if gold breaks through this first level, it could make its way towards the next take profit resistance level. And so we don't see why that's resistance on the 5-minute candles, but if we go to larger candles, we just might. So on the 2-hour candles, now it matches up perfectly, and this is a different line. But we see here, we just drew this one on the 5-minute candles kind of blindly based on the signal, not seeing the resistance on the 5-minute candles. But when we went to 2-hour candles now, you follow that across, and there's the resistance perfectly. Okay, so if you're wondering why in the signal you see these lines and suggested take profit levels, it's because that's where in the past there was resistance. Okay, and so this is the upper line here. The lower one was at 26.56, which it already broke once, which was here. And you see again, that was resistance here and down, and it was resistance here and down. And so when the signal came out today, it says if it gets near this first resistance level, you might sell. Okay, so it already did that. That would have been a winner if you're more patient, or maybe you did a half partial close or something. You could still be waiting to see if it'll go to the next resistance level. So when you see these signals, there's two aspects to deciding whether you want to follow a signal like this. One is understanding the technical analysis of it. And we could draw our own signals, right? We can look at the chart and we can see the resistance level here and draw a resistance line. We can go to the next one and draw another resistance line here because that's where it was in the past. And that's exactly what this was. The support level down here at 26.34, that's this line I already drew as well in the past before this signal ever came out. I'll just slide this up about 50 cents. And so there's 26.34. It's this support level right here, support and up. It broke it once, but then it became support again, 1, 2, 3, 4 times. And so that's why it said buy as long as it's above here, it's still an uptrend. And so it hit and bounced and up it went to the first take profit level. So these signals are largely based, these price levels, on support and resistance levels that you can find yourself on any chart. So you could create the technical analysis of the signals on your own or verify them when you're looking at the signals that are presented, okay? Then the next part of that is, do I like the entry point? And if I looked at this earlier today when it was near the support level, then yes, I would have been in a hurry maybe to buy on this, especially understanding that there's expectation of a rate cut coming before the end of the year maybe in the US, which should weaken the US dollar and allow gold to rise against it easier. So the fundamentals were with the buy here, and a little earlier today, the technical entry point was opportunistic. Now it's not so opportunistic, but it's still a potential buy, okay? The signal did not carry all the way to the top of the take profit zone, not yet, okay? It might pull back to a price you like better, and if you still wanted to buy, maybe you want to wait and see if it pulls back closer to this support level so you can get your stop loss below it and not have to risk as much. Because right now, if you want to get your stop loss below the support level, you'll be risking more than the potential profit to this upper resistance level, okay? Which is okay. You can risk more to your stop loss and have a smaller potential profit, but maybe it's not ideal in terms of an opportunistic entry point with the technicals. So this signal I liked it earlier today. I don't like it as much now in terms of the entry point, but I do believe the US dollar has reason to be weak with the rate cut expectations, and that this has a chance to push up to the second take profit level up here even this evening, okay? Still with that signal. Now, you could, if you were going to buy on it from where it is and you didn't want to risk all the way below this price level, you could get your stop loss below one of these wicks down here for a smaller risk, okay? And you can work this out. If I want to know, well, how much am I risking to set it up in different spots? Okay, I can come to the order window. I can put take profit 26.60, let's say 65.5, just before that resistance level. 26.65, 50. Okay, stop loss. I have to decide where would I put my stop loss. Now I can go to smaller candles and I can get an idea to say, okay, here's a pullback. It hit the first resistance level and down it came. Maybe if I want to risk less, then I don't want to put it all the way down here below the major support level. I could decide, okay, as long as it doesn't break this low that it just bounced up from now, I could put my stop loss here and have a small risk. If it breaks that low point on this wick, then I'm out. Okay, so I could say 26.46, just a couple dollars down. Okay, so now my potential profit is much more than what I'm risking. Now I just need to adjust my trade size to risk the amount that I'm comfortable with. So if I do one lot, now I'm risking about 500. If I want to risk around, let's say 1% of my balance, then I would risk about 600. So I could go a little larger, 1.1. I'm risking 510, 1.5. I'm risking 711, 1.35, 620, 640. It's moving as I'm looking at it. So there's about a 600 risk, 617, 615 to make about 2,000. Okay, so once I have that set up, now my risk management's done and I take my trade. Okay, so I went with the buy signal because I think the fundamental news maybe supports that. We see it was a strong uptrend and we see the signal was solid up to the first resistance level. So what I did was went ahead and enacted a buy with this pullback, put the stop loss below the low of the pullback, and if it bounces back towards the first resistance level, then we have ourselves a winning trade. And we don't even need it to break through this resistance to get to the next resistance level. Okay, we could do that. That would be a larger potential profit, but it's easier to be able to reach this level than this level because we don't have to break the resistance to hit our take profit, and it's still better potential profit than risk. Okay, and we have to go back to the 30-minute candles to really understand why did we put our stop loss here. It's just below this level. Okay, let's see. And actually, I take that back. We did put our stop loss at the 26.65. Right about there, just before the second resistance level. So it does need to break the first resistance, which it already did once briefly. And then it doesn't need to break the second one to get to our take profit. If we wanted to do it the other way, we could have put our take profit at 26.55 and it would have been more one-to-one potential profit to risk, which would have been okay as well. It depends on what you want to do. And what you can do is as you're watching the trade, here's the open position. If it gets near the take profit, or I'm sorry, near the first resistance level, then what you could do is modify the trade. You could close part of it. You could do a partial close. Let's say it was in profit now and you wanted to do a partial close. All you would need to do is click on edit. Okay. Actually, let me go to this area. And then we click close, not edit, close position. and then I can close the amount I want to close. Right now it's in profit now, about $30. So let's say it was at a spot where I'm up, I don't know, 500 or 1,000, and I decide, okay, now I want to close part of the trade. So I could put the lot size that I want to close. Okay, I could change from 1.3 lots to 0.4, closing a little less than a third of it. And if I close the position, it'll only close that portion, and I'll pocket that portion of this profit. Okay, I'll just show you how it works. So I'll close. I just closed part of that trade. So I pocketed a portion, about a third, a little less than a third of the profit that was showing. And the rest of the trade is still running. And so you can operate in this fashion at any time based on reaching a less significant resistance level. You can close part of the trade. If it breaks through and goes to the next resistance level, you could close another portion of the trade. And then if it hits your take profit, then the rest closes automatically. Okay, so looks like we caught this at a good time, at a good spot where it really is bouncing up to try and go towards our take profit up here. Okay, here's the first resistance that you could take some more profit if it reaches here, and we've got our take profit up just before the second resistance. By the way, we can drag this take profit. If you decide to move it, just like that, I changed my take profit. Just left click and drag it up or down wherever you want it to be. Same with the stop loss. I could grab this and drag it down or up. Maybe I want to move it up to entry at some point, and I drag this up a little higher. Okay, so you have that flexibility to adjust the trade on the fly right from the chart. I'll pause for a moment. Any questions, comments on what we went through with that strategy from the signal? Okay, and if I see any questions pop up, I'll address them as I see them. This isn't the only location to see signals in this area up here where I'm pointing. So, there are areas, tools over here where, for example, I can go to the market buzz, and actually here it has all the signals. So if I click on this section, you've got all the technical signals, only instruments that have signals. Okay, you click here, view signal, if you want to see the signal. Okay, whereas in the other view we were on, some of them have signals and some don't. Okay, many of them do, but some don't. Now, another area where we can look is in the market buzz. The market buzz gives you some fundamental news, which we go over in more detail in my fundamental analysis webinar, but I want to show you this section because it has technical analysis as well. So maybe you heard a story recently about a certain instrument, whether it's a stock or you can switch to the cryptos if you're able to trade those in your region, or commodities, etc. You can look at any instrument you want. Maybe I heard something about Amazon or whatever it might be. So I click on it in this tool to see what's the recent news. And I also get a view of what the trend analysis is. What's the prediction on this instrument? And so the prediction is Amazon may rise 10% or so. Okay, that's, if you want to see the technical analysis behind that, you just click on this, and it's just like the signals. Okay, you've got a support level at 195.80. You've got take profit zone recommendations between 221 and change and 228.80. Okay, so it's got that information there for you. Just like we did on the last signal, if you look at a larger chart, you'll see that these lines are drawn at these price levels because somewhere in the past, it was a resistance level where the price hit and came back down. So that's why they suggest in the short-term trade, you might look to take profit at these prices because it might find resistance at those levels based on what it did in the past. Okay, and if the move drops below this pivot level, then they say you might sell. So your buy move might have your stop loss below the pivot, and if it did break below this pivot level, they're saying it could then drop further because that would break the support level and establish downward momentum. But right now, the fundamentals and the technicals, they're predicting buy here. And you can read the latest stories here, the latest news articles, by clicking on these article links and see, is there anything that came out in the past hours? And you see these are time stamped 2 hours ago, 3 hours ago, 9 hours ago. You can look and see what's the most recent news that we've found to see if that also helps your opinion that maybe in this case Amazon should go up. Okay, are they positive headlines or negative headlines? You know, it's Black Friday just occurred, now Cyber Monday occurred. That usually is good news for companies like Amazon with the online shopping and all the money that they do this time of year. So all of this, maybe if you read some of these articles, would tie together to trust this signal. And if that's the case, then you go to the chart and you see, well, where's my entry point right now? Because you know they're saying once it gets to 228 or so, that maybe you would sell. So if we look at Amazon, we can see what's the technical setup look like right now. So let's look at Amazon. Okay, U.S. market is open. We see Amazon gapped up. Okay, and it has not reached 228 yet. 228 would be here. So this is the top of the take profit zone up in this area. Right about there. We might go to larger candles. That looks like a messed up chart. Okay, here's our 1-day candles. And it looks like there's no resistance level. Why? Because Amazon's at an all-time high. There's no resistance there. So that was just a percent gain take profit suggestion. Okay, they looked at how much they thought it might go up percentage-wise. There's no resistance, similar to a lot of the major indices that are at or near all-time highs. Buy predictions, they don't have resistance levels when they're at all-time highs. And so the anticipation based on the past climbs that it's done is that this could push towards 228 plus. Okay, it did break this resistance here. Okay, this was a resistance level, pushed down, and it just broke through there. So if I was buying on this, I might put my stop loss just below this resistance level that now should act as support if it comes back down. So I would put my stop loss somewhere about here from a technical perspective, because if it pulled back, it has to break back below this, what should be support now once it broke through that resistance today. If it breaks back below there, then I would get out with a small loss. And my take profit I would have just before the resistance level up here. Okay, so we can do the calculation. What would my potential profit and potential loss be? Take profit to, let's say 228, just before the 228.80 resistance from that signal or from the trend analysis. And my stop loss down here at 213, let's say 80. Below that support level, which was the old resistance that it just broke through. So 213.80. Okay, so better than 2-to-1 potential profit to risk. I might lower my trade size so that I'm risking the amount I want to risk here. If I wanted a certain amount that I know I want to risk per trade. So 1.5 lots gives me about 700. 1.35, I'm risking just over 600, 1.3. I've zeroed in on about 1% of my balance, okay, to make double that, little better than double that on the move. So if I want to make a trade on that, I've risk managed it. I'm trading in the direction of the trend prediction, from the market buzz area that we looked at. And I've risk managed in a way that it's an opportunistic entry point. I've got a support level here that I've got my stop loss under. I'm in the direction of the technical breakthrough. It broke through the resistance here just today. And it's opportunistic because I can make double what I'm risking. Okay, without even having to break through any type of resistance because there just isn't any over here. Any questions, comments on anything so far? I'll pause. we can see the trades. And if I see any questions pop up, I'll address them. We can see the trades that we've enacted so far. Even with closing about a third of that first trade, we're still up nicely again on this move. It would be more if we hadn't closed a third, but basically I wanted to demonstrate to you how to do partial closes. And so, if I'm looking at this gold chart, and again, if I decide on the chart that, hey, it's reaching another resistance level, like for example, I'm on only 1 minute candles, but maybe I'm a short-term trader, and I think if it reaches this resistance level on the 1 minute candles, which is where it hit a little while ago and pushed down, if it gets here, maybe I want to do another partial close. Okay, right now we're up over 130. Let's say that I thought it might pull back now. So very easy. Okay, I can click here, click close position. I can close again the amount I want to close. Maybe I'll close half of it now. Okay, I just pocketed it, I don't know, $50 or something like that. And now if it pulls back down, I could re-enter with that part that I closed in the money. If it continues to climb, I make more profit. Okay, and it has still not, if I click on the gold again, let's get the gold chart, it still has not reached the major resistance levels. If we go to the 2-hour candles we were on, okay, this is the first, let's get rid of some of these lines. This is the first resistance level. It's still trying to get there. And the second resistance level is up here. Okay, so you can manage your trades this way, even with partial closes at strategic price levels that you think there's resistance where it might pull back. And if it does pull back, then you can re-enter that part you closed from a better price. And you can capitalize even more profit by strategically doing partial closes and then re-entries if it pulls back from those resistance levels. Just a way to capitalize even more on those support and resistance levels, because they do play a significant role with how the prices move on the charts many times. Okay, we could take a look maybe at one more instrument. Maybe a currency pairing. If there's reason for the USD to be weak, we could look at something like the Euro USD. There is a signal we could look at. Again, not surprising, right? A buy signal. Why? Because we talked about the fundamentals news for only maybe 5 minutes when we started. And you see the power of that fundamental news, even when you're doing your technical analysis. And that is, before we looked, we would have assumed probably this is a buy signal on Euro USD, and indeed it is. Why? Because the US numbers were weak today on the advanced data payroll, on the economic calendar, which we have on this platform, and we go over on my fundamental analysis day. So you could pay attention to that, see, okay, there's reason for increased optimism about rate cuts in the US now, which should weaken the US dollar if there's anticipation of a rate cut. That's typically the relationship there. Lower interest rates, cheaper currency, okay, weaker currency. The higher the interest rates, the more the currency costs to borrow it. And so it strengthens the currency. So it makes sense that the euro is climbing from a fundamental perspective. Then had you looked at this a few hours back, you'd see, wow, it's a buy signal. There's a nice support level here. The take profit zones are up at the resistance levels, and you might have acted on this signal as well. And so that way you're not blindly acting on signals. You pay attention to the fundamentals a little bit. Then you look at the technical analysis and see if you like the support and resistance levels and if you like the entry points. Okay. I don't like the entry point for a short-term move here because it's already in the take profit zone. These are resistance levels. If we look on the larger chart, we'll see it. Right now I'm on one-day candles. Let me get rid of some of these old lines. And let's go to maybe 1 hour candles. Here's resistance I drew in the past from even last week. I think I drew these. And that happens to match the resistance level for the first take profit zone. Their support level is down here, 104.85. which you can see why this is a support level. Okay, you see here, the price did dip below this price, then came right back up and had support here. It held, and bounced. Then it came down again here and bounced again, came down here again, testing it, and right back up. I might draw my support level a little lower than that, like right about here. But this is a new test of it, and then right back up. But you can see in these signals why those price levels are drawn at those levels when you look at the technical analysis. Now, they say the upper level of this zone is 105.55. So then I'm looking, if I get myself another line to draw, 105.55 is about here. Why did they say that price? Because that's the next resistance level on the chart. You see resistance, 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 and down went the price. Again, tested it, couldn't break, down went the price. And then once it broke that, that became support, support, support. Okay, so this price level has resistance in the past, and so they're expecting if it gets up here, it might find resistance, at least temporarily, again. Okay, so very successful signals coming out of Trading Central today, largely because the fundamentals matched the technicals. And this is what I suggest you do before you follow the free signals that we give. Check the fundamental situation first, the economic calendar, the headlines, and then decide, okay, do the fundamentals support the technical move here? Because the technicals always look good in the signals. But you know, if right now we knew that jobs data came out that was really stronger than expected for the U.S., and this signal was right here, like earlier, I wouldn't have bought on, because that would have been fundamental news that likely would have strengthened the USD and broke this support level. In that case, I probably would have put a pending order below this support level, and had it broke, then I would have sold with this signal, with the alternate move, the sell scenario that they list in this case. They always list the primary move and the opposite move in case it breaks the pivot line level. Okay, but this is continuing on in the original signal direction because it was a good setup technically, which the signals almost always are, and the fundamentals are behind it at the same time. So I expect this will likely reach the second resistance level as well. It's a bit late to get in maybe, but it looks like it will reach, or try to reach anyways, this second resistance level. We'll see how it goes. I think this is a good place to stop. We've kind of hit home the point here. These are on a pullback, by the way. So this pullback, let's say on gold, I'll show you an example now of the advantage of doing partial closes. This pullback on gold now gives me the opportunity to re-enter the parts that I closed in profit, to re-enter those from a better price back into that initial trade size. Okay, so if I wanted to go to gold and do a buy, I certainly could do that at any time that I wanted. Okay, so I could bring up gold in the trade area. And I could look for an opportunity to re-enter now that it's pulled back down close to my original entry point. I could re-enter those trade sizes that I already closed in profit. Okay, and that's up to each individual trader whether you want to do that or not, but it's something that you easily can do. And you might be more patient now because you already took nice profits in the simulation that I did here, and I might wait to see if it bounces off this first, then maybe re-enter. Okay, that's up to you, but I certainly could decide to just go ahead and buy on this again, put my take profit at whatever level I want, the first resistance level, the second resistance level, and have almost a free trade here because I already pocketed the risk for maybe a partial trade again. Okay, so a lot you can do with these signals, with entering trades, re-entering trades, partial closes at the different designated resistance and support levels. And we see it's bouncing again, so a re-entry would have been nice in this case. All right, everybody, I think it's a good place to stop. Thank you for joining. Good luck with your trading the rest of the evening, and I'll be back at it tomorrow, 11 a.m. UK time with my fundamental analysis webinar. Hope to see you there, and if not, all of our sessions are recorded, and you'll find them on our YouTube channel usually by morning time the next business day after each session. All right, thanks everybody. Bye for now.